Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. All right, daily chart. So, look. All right, Bears. We've talked about this for a while. We talk about it every day. How do we distinguish between a pushback that isn't going to last versus one that could last for a little while? So the Bears yesterday had a good opportunity to get the ball rolling on that process. And just if you're brand new, welcome. The rules are as follows. Close below 2 lines on the chart that are significant. In this case, the 9-day and the weekly pivot. And you can throw in the daily midband, the 20-day simple moving average for good measure. On Wednesday, we close below. So now what they need to do is for the next Globex session, he tried to say, not part of it, not most of it, not let's make an excuse about some print. You have to stay below it for an entire Globex session. If you do that, then we have something to build on. So what do? They take it down. They take a couple looks at the 50-day, the red line there, the monthly pivot there, come in shallow, don't even print 3,700, and they spend the entire day giving it up. And I mean really giving it up. It was another great trading day. Volatility was awesome. People can do GameStop and AMC and wonder if their trade is going to be allowed to happen, or wonder if their trade is going to get filled, or wonder if their account is actually going to get paid out ever. And I think we're at that point now with those guys. Or you can just trade some futures, which they'll try to tell you is a lot more risky than a lot of this other stuff, but everything's risky. And if you go into it with a good risk focus and learn how to do this stuff, you'll find that what you've got right here is actually the most level playing field out there. I don't get up on my soapbox very often, but these are interesting times that we're in. Please don't tell me that stock trading is a level playing field. It's not. It never has been. This little pool that we swim in every day is technical. Support, resistance, everybody's got the same chart. It's all, volatility, liquidity, the whole thing. Take the time, read up about it, learn about it, go into it with your eyes wide open. And what it provides is it's consistency. You want to learn how to be a trader? You can trade this, you can trade anything. Seriously. This is not the first people that have known me for years and been with me for 5, 8, 10, 12 years will tell you. This is nothing new that's coming out of my mouth. But, when you're wondering if you're going to get filled, or if you're going to get paid, or if you're going to have, margin today, or what your margin is going to be from one moment to the next, or whether you can open a position or close, these are issues, or, whether your options, if you're just in options, where the market's going to be come 9:30 the next morning, since you can't do anything about it. None of that's an issue here in index futures land. So if you have interest, if you enjoy doing it, start off by watching this every day. We do these every day. Done it for 6, 7, 8 years. But the level playing field, you're looking at it. All right, I'll shut up now. So what they needed to do yesterday was stay below here for the entirety of the day. They didn't. So it was a nice long to ride up. Now, what's interesting is then you get up into 38.20, 38.25. And it stalls out for about, a few hours. It was basically the afternoon. Then the Bears did what the Bears don't do very often. They push back. And they do a good job of it too. So it turns into a really nice short late day yesterday. We were in there around 38.16. We got everybody back in the 70s because you got the pre-FOMC level here at 77.5. It had tested it here, and then we pushed back into 37.20s. Now look, you've got a series of higher lows, but at the same time, all this does is really the whole rule is reactivated again today. Here's your close, okay? Here's your close. closed at 37.68. So below the 20-day, below the pre-FOMC price, below the 9, below the weekly pivot. So what do the bears need to do? They need to stay down here all day. All day. No going back in the 38.20s and violating these levels. Stay down here. You don't necessarily have to crack 36.99, do Wile E. Coyote off a cliff, and that's where the bears actually get themselves into trouble, because they get out too far over the tips of their skis, and it's very easy to bounce them. So a steady move down, a boring range trade in the mid 3700s would be just what the doctor ordered for the bears. What do the bulls want to do? They want to get back above the hourly midband, and they want to lift this sucker right back where they were yesterday, and they want to close it, if they can, above the 20-day. If you close it in here, then heading into Sunday night, I would imagine the new weekly pivot will be somewhere in that area, and they can fight over it Sunday night into Monday. So the most recent pressure that we've seen, there was J&J vaccine news. We had a nice little 30 handle, 2-minute candle there. They've taken it down to 27.5. They're pushing it back to 43. I think everybody is being an amateur scientist and trying to figure out what all this stuff means. I don't know what it means. We were short 53 going into it. We didn't know they were coming out with anything today. We were just looking at lower highs. So we've taken some profits on that. I think we probably end up getting stopped out before the open. It whips up to 53. It's already bounced from 27 to 46 now, but we've taken a good amount of profits on it. So we'll see what happens. But keep an eye out. You've got volume weighted average price 45, our proprietary moving average 47.5, 5-minute mid band 53.5, and hourly mid 60.5. So it is your range of price there, especially now that it's been exacerbated with this vaccine stuff. We could really, really whip this morning while everybody tries to figure out Robinhood, while everybody tries to figure out COVID and vaccine. There's plenty to whip around and throw around this morning. So for our part, our day is made. Our day goals, week goals, month goals are made. If it's too whippy to trade, then we're probably going to call it a weekend. If it's volatile enough to give us some direction, then we'll trade it as long as it wants to be traded. So we'll see how it goes. All right, everybody have a fantastic day. Have a fantastic weekend. If you have a friend that doesn't know what futures are, or doesn't think that futures are this or that, and you have been trying to tell them for a long time, you really should be, send them this video. Send them this video and have them watch this for a while. And, hopefully what they find is that if you're interested in technical trading, whether it, it doesn't have to be me, but just in general, this is the level playing field. Learn how to do this. Put in the time, put in the effort, invest the money, learn how to do this. Because if you can do this, you can do anything. All right, have a good one. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.